And I was looking at the accounts of that bank, that private bank. And it was a subsidiary of one of the large banks in the UK. And I was looking at the income line. It has interest income and non-interest income, right? Banks will define their income differently. Other people will say turnover and cost of sales.
So to differentiate the two forms.
Yeah.
Okay.
And the percentage of interest income was, near 80%, 77%.
Wow. Okay.
And the balance was, I guess, fees and kind of other type of charges. And I sat there and I looked at that, and I was deeply uncomfortable because the year before I'd been on Hajj.
Okay.
And on Hajj, I think I had a dream which I didn't quite understand. One of those pivotal moments in your life where you sit there and you just think, what am I doing? And alhamdulillah, I mean, from that Hajj and also that pivotal moment, I guess doorways opened to joining what was then to become the first Islamic bank in the Western world in terms of fully authorized by what was then called the FSA.
Sultan Choudhury, first of all, Assalamu alaikum and welcome.
Wa alaikum salam.
So you are currently the executive chairman of Offa, formerly one of the founders of Islamic Bank of Britain, and also formerly the CEO of Al Rayan Bank. So very experienced. So first of all, tell us about Offa. What is Offa and what's your role there at Offa?
Yeah. So Offa is an Islamic finance house focusing on property investors and providing Islamic finance for property investors. So we'll support investors in their journey of acquiring properties, refinancing properties, and generally help them to build wealth, but using ethical and Islamic finance instruments, right? So our focus, I would say, other than going hand in hand with our investors, our customers, we like to focus on speed, and we use technology as part of our processes to kind of take away cumbersome paperwork and make it a really slick process.
So in terms of when you say a finance house or a finance organization, what type of financial products or services would you be providing to people in the property space? And is it home finance as well for homeowners?
Sure. So the current product set is real estate bridging finance. So it's short-term real estate financing. So we help people acquire properties, typically property investors who are into BMV, below market value at auctions. They need, I guess, a company that can move quickly, right?
Yes.
And help them buy at auction quickly. So that's one of our bread and butter products. So we would assess the acquisition, turn it around, help them get the finance, and we close deals in a week, maybe 2 weeks, right? So we assist them acquire it. But of course, in bridging, people have to exit. So it's either they're going to refurbish the property and sell at the margin, or they're going to refinance off to a lower cost product, like a buy-to-let product, right? And so that's the other type of product we provide. We do buy-to-let finance. So that's up to 30 years.
Yes.
That's rent only or acquisition and rent. So they're the kind of core products. We have done heavy refurb, the odd development, but we tend to do what we call kind of light refurb and plain vanilla bridging products. And then we have the buy-to-let products. And within the buy-to-let products, you've got your normal buy-to-lets, limited company buy-to-lets. If you're buying it through a company structure, we'll do HMOs, we'll do MUFB, so buildings with multiple flats. So it's quite a nice offering, but it's all very much aligned to helping the property investor. In terms of our future plans, we'd really like to get into home finance, where somebody lives in the property, owner-occupied properties.
Yes.
And you asked me what my role is, so I should answer that. So forgive me, I didn't answer that.
What I'll do, actually, I'll come back onto your role in just a moment. I want to hold that for a minute. So with regards to various products you talked about, they're typically the kind of products you go to a traditional lender, interest-based products. So what you're doing is providing products that achieve the same kind of outcome. I guess the process is different in terms of how they're structured and how they're put together.
Yes, so going into the underlying aspects of the contract or the product, they're all based on Islamic finance principles. So the first one, which is most commonly understood, is the avoidance of the use of interest, right? So interest is prohibited in Islam, very clearly in the Quran, for example. So we design our products on the basis of rent or profit. And in the Quran, it says tijara, which means trade. Trade is encouraged.
Yes.
So the principles we use are based on trade, or rent in the case of musharaka, which means kind of partnership funding. So they're the kind of principles we use, and we can get reasonably technical about it. But the products we have, the principal one being the buy-to-let one, is based on musharaka and what people call diminishing musharaka. What does that mean? It's co-ownership of a property, and where the shares change over time. So the customer owns more and the finance house owns less, i.e. the finance house's share diminishes over time. And then you charge rent for the portion of the property that you don't own, right? So if you're our customer, you pay rent on the bit that we own, and over time you're buying more from us, right? So it's a very common instrument. Most of the Islamic finance community
they follow
use
generally
that's the primary model.
Yes, we might get into a little bit more detail of that in a short while. So tell us about your role at Offa. What is it you do at Offa?
Sure. So I'm one of the partners at Offa. My role is executive chairman. So I essentially lead the organization at the kind of highest governance level. I also work with the board. Our primary shareholder is Gulf Islamic Investments, which is a large PE fund that only does Islamic investments.
Okay.
So, our funding is essentially Islamic finance. The partners that work at the firm, so the chief commercial officer, the MD of bridging, and the chief finance officer, we've all got a background in Islamic finance. Largely, we're actually local as well to Birmingham. We can talk about that a bit later. And so we bring a wealth of experience, and that's probably one of the hallmarks of Offa. I mean, I've got 2 decades just in Islamic finance, 3 decades in professional and financial services, largely in financial services. So we've worked in a range of disciplines within finance, from capital markets. The team at Offa launched the largest sterling sukuk at the time in the world.
Yes.
Which was oversubscribed by many institutions from London to the Middle East. We did the first buy-to-let product, Islamic buy-to-let product, again in the UK, and the first one ever.
Yeah.
We did the first deposit accounts. So we've got a huge pedigree in Islamic finance, and working within the regulated system in the UK. So how practically to navigate regulation to protect consumers, but also build Islamic finance. And as part of my role, I operate with the UK Islamic Finance Council. And so we work with government regulators, HMRC, His Majesty's Treasury, I should say, to try and make sure that the regulatory environment, the tax environment, is suitable for Islamic finance.
Yes.
So we're always working to lobby government to make sure it's a level playing field for the industry, not just for Offa.
Hey, if you're enjoying this video, I'd like to ask you for 2 things. Firstly, who's one person that could probably benefit from hearing this right now? Click that share button and get this video sent over to them so they can see this as well and also benefit from this information. Secondly, if you could click on that subscribe button, it really helps us probably more than you realize. What it does is allows us to get this message out to many more people that should also be seeing this and hearing this as well. And the great part is it's absolutely free, it doesn't cost you anything. So click on that subscribe button, and now let's get back to the podcast. And in terms of Offa, where does the word come from?
Well, it's a lovely story. I always enjoy talking about it. So Offa was a king back in the 700s, so a long time ago, right? And he was based in the Birmingham area, what was then called the Kingdom of Mercia. Nice. His capital was in Tamworth, on the edge of Birmingham, and we're based on the edge of Birmingham as well, in Solihull. So there's a kind of a geographical link. But the most interesting link is that back in the 700s, his currency, his coin that was in use was a coin that was imprinted with Offa Rex, in Latin, King Offa. Okay. And on the other side, in Arabic, and this think about this, in the 700s, right? 1400 years ago, it said, La ilaha illallah, which is the Islamic testament of faith. There is no God but Allah.
That's amazing.
And so a king at that time on this island, in proximity of where we are sitting here today, right?
Yes.
Right? Within proximity of this place, coinage that mentioned the Islamic testament of faith. So I think it's a nice narrative, but it's actually got more meaning for us today. British Muslims are here now for 3-4 generations. Many of us have got grandchildren here now, right? And we have to feel that we belong, that we can contribute to society here in a positive way, and that we actually have a link here historically. And there's many links I could draw. We picked Offa. It's a symbol of that linkage. But if I look at, say, my uncle, he served in the British Army under the colonial era of Britain. We've been here creating wealth, helping the economy, working in multiple sectors. British Muslims contribute to the UK. Islamic finance is a very important way that we can contribute as well. And I think it's a very positive story that Islamic finance is creating jobs. It enables foreign direct investment, so that creates jobs and buildings. The tallest building in London was created with Islamic finance money. How many jobs went into building that, that entity and that infrastructure? So we've got to think about Islamic finance being a positive story in a largely negative narrative that exists in the media, and I think that's if you like something that Offa is part of.
Yes. Let's take it right back to the beginning of this journey. Many see you as one of the founding fathers of Islamic finance in this country. So about 20 odd years ago, you got involved in the, I guess what would be termed as a startup at that time.
Yes.
Tell us about that journey and what the path that took you on.
Well, it's interesting. It's gone full circle, right? Yes. So it was a startup, and then 20 years on, I'm involved in a startup or a scale up, if you want to call it that. So really interesting time. So I guess plotted very much a traditional route of I trained as an accountant. I went into financial services, into stockbroking, and then somehow ended up at a private bank, but a conventional one. And I was kind of a bit uncomfortable working there because it was a bank that acquired the stockbroker I was at. So I kind of didn't apply for that job. I ended up there. And it doesn't matter where you work, you have to apply professionalism to your job. I'd like to think I did a good job.
Yes.
And I was sitting on the edge of Hyde Park, actually. They had offices, a private bank had offices on the edge of Hyde Park. And actually that site is now the site of the most expensive apartments in London, right? So One Hyde Park, right? So when I was sitting where that building is today, and you got the Serpentine, it's a lake in Hyde Park to my right. And I was sitting there working late, management work late, and they'd asked me to do a restructure. And I was an accountant by background. I'd become a specialist in restructuring. What does restructuring mean? It's downsizing, right-sizing, eliminating costs, that type of, I guess, skill set.
Reallocating human resources.
I was good at it, I was an efficiency expert, as it were. And I was sitting there and I was looking at the accounts of that bank, that private bank. And it was a subsidiary of one of the large banks in the UK. And I was looking at the income line. And banks have slightly different accounts, the way we allocate lines. And it has interest income and non-interest income, right? Banks will define their income differently. Other people will say turnover and cost of sales.
So to differentiate the two forms.
Yeah.
Okay.
And the percentage of interest income was, near 80%, 77%.
Wow. Okay.
And the balance was, I guess, fees and kind of other type of charges. And I sat there and I looked at that, and I was deeply uncomfortable because the year before I'd been on Hajj.
Okay.
And on Hajj, I think I had a dream which I didn't quite understand, where I was working in a tall building, a kind of oldish tall building, and there was a call center. And in that call center were people with long beards and a hijab, right?
Okay.
And sisters with hijab.
Yes.
I I didn't know what it meant at the time. I'd always had an interest in Islamic finance. Anyway, from my university days, I did economics at university. And I didn't know what it quite all meant. And I sat there, and it was that kind of one of those pivotal moments in your life where you sit there and you just think, what am I doing? Yeah. And alhamdulillah, I mean, from that Hajj and also that pivotal moment, I guess doorways opened to joining what was then to become the first Islamic bank in the Western world in terms of fully authorized by what was then called the FSA. And so that, what happened was I started looking to see if there was something in Islamic finance. There was very little. And we got wind of some venture capitalists in Bahrain looking to open the first Islamic bank.
Yes.
And so I applied. I was overqualified, so I took a pay cut.
So you were in a senior role in the private bank, so it was a case of a
I really
step down in terms of
I took one role, I guess, below where I was.
Okay.
I was overqualified, I took a pay cut, I took a positional cut. And they asked me, why are you taking this? And I said, look, I really believe that we need an Islamic bank in this country. We need that option. And I joined, and it was very, very hands-on. It wasn't, I'm a manager and I'm just bringing in consultants. It was literally writing out the chart of accounts, doing the flows, the product workflows, building the system with the IT guys. I was the head of operations.
It was a true startup there.
Yeah, it was a true startup. We worked in a basement in Old Street in London, which is now a famous place for, it's called Silicon Roundabout now, by the way. So people call it Silicon Roundabout. So a lot of startups, digital startups were there. So we like to think we're a forerunner to that. And fantastic experience. I'd done an MBA just a couple of years before.
Okay.
And it's like putting it into practice.
Right, yes.
And I said to myself, how did I reconcile taking a pay cut, if you like, such a big pay cut? I said, well, how much would I pay for an MBA? How much did I pay for my MBA? And it was about, half a year's salary.
Yes.
And actually that was theory, right? So that's theoretical. So it's, it's case studies and whatever, but it's still theoretical. What would you pay to have an experiential MBA? What would you pay for that experience?
That's invaluable.
And so I kind of decided to invest in myself and let's go for it.
Yes.
First
so that was
high street bank
justification from a logical point of view. I'm taking a pay cut, but actually I'm experiencing the MBA rather than just learning the textbook MBA.
Correct. I'm learning, I'm experiencing, I'm developing myself. And it's a startup, yes, but it's somebody's invested in that. So you've got an obligation, you've got a responsibility to treat their money like your own. So we were very frugal, just like a startup should be, kind of making sure that we set it up in the most efficient way. So the team was formed. We taught ourselves Islamic finance through the Sharia scholar that they'd hired, and the Sharia auditor. So it was like in parallel to building the system, understanding Islamic finance, then going next door to the IT guys, change it like this, it this way, let's build Islamic products. And great fun. That first year was, we did so much. We built the system, we got it audited, we passed the FSA license process. We launched the first branch, we launched the first product, we listed on the stock market, and all in 1 year, one year. And I think actually, even if you look at startups today, not many would have done what we did in 1 year, listed in the stock market. So we raised about 60 million, I recall.
Okay.
But our stock market value was close to $1 billion. So it was highly inflated, right? Because
it shows the level of excitement there was in such a new bank and product coming to the market.
I mean, we were on the 6 o'clock news, the 9 o'clock news, the first Islamic bank in Britain. Our branch in Edgware Road was, all over the Middle East and the UK. And we had a lot of Middle Eastern investors. The euphoria was amazing.
Yes.
So yes, it was inflated, the stock price, because if you really looked at the nuts and bolts, there was one rented branch in Edgware Road and one very cheap office suite in Edgbaston in Birmingham, right? Yeah. And there's no way on earth it was worth $1 billion. So, eventually the correction happened. and it kind of corrected to its actual
Was that
reasonable
due to external market conditions, or just generally you think awareness about the possible scope and size of this business?
Well, I think a number of things happened. So 2004, had really big growth spurt into 2005.
Okay.
But then 2006 and 7, if those of you remember the Lehman's crash, there was
changing,
a financial crisis.
Yes.
The largest financial crisis since the Great Depression happened around the world.
Yes. So the external market conditions were such as well.
Correct. Okay. So it changed. So clearly that had an impact on the valuation of all entities in Islamic finance.
Yes.
We were stock market listed,
yes.
so it impacted us as well.
Well, the government was busy buying up NatWest and Lloyd shares at the time. So
correct, and rescuing a number of banks and whatever.
Often the perception is you need a large amount of money to be able to get involved in property. Although that can be the case, it doesn't necessarily have to be. There are many, many different ways that you can make money from property. The biggest challenge is, though, that many of them can't be done in a Sharia compliant way. There are, however, still some strategies and techniques that can be used to make significant profits from property. I've put together a short training for you that explains how you can make money from property in a halal and Sharia compliant way. Head over to the link, which is sajhussain.com/halal, and you can get the free training there. Now let's jump back to the podcast.
Okay, yeah. So how long were you involved in the Islamic Bank of Britain, and you then worked your way up to a fairly senior position there?
So 15 years. Within 2 years, I was on the board as Chief Commercial Officer, or Commercial Director, as it was called then. Okay. And in 2011, I became the CEO. Took over that entity, and it was, I guess, it was troubled times. We were losing £1 million a month.
So at the beginning, so 2007, 6, 7, that time, although you'd grown, you were losing money as a business.
So 2007, I became commercial director.
Okay.
And that's when we started moving into home finance.
Right.
At that time, Islamic home finance was not regulated. So we kind of launched our product a year and a half later.
Okay.
We were up against quite established players like HSBC and Bank of Ireland. They had Islamic products.
Yes. Because a few of the high street banks had labels that they had products under that were under the Islamic finance banner.
Yes, they're called Islamic windows. So a window of a conventional bank doing Islamic finance.
Right.
So we were up against some quite tough players, and we were the little independent bank. But alhamdulillah, you use your marketing expertise, find your niche, find your segment, make sure you're successful at it. And of course, we launched the first buy to let product, I think I mentioned earlier. And I guess, it took a bit of time, so we needed to raise capital. We had a few changes in ownership in that time. In 2011, when I took over, we were losing about £1 million a month. And it was a change, turnaround strategy, as we call it. Okay. So the turnaround strategy involved a couple of things, right? So back in 2007, the first thing I did was, look, there was a business plan that said, let's open an Islamic bank and all the Muslims will come, which was clearly unrealistic.
Yeah.
Because there are many factors in the buying decision of a financial services consumer. Not least is, I guess, trust and longevity in the institution you're putting your money in.
Yes.
So one of the things I said was, look, let's not assume people are going to come here and give us your whole wallet. Let's just get a little bit of a wallet. So let's launch savings accounts, term deposits, notice accounts. I went for a good range of savings accounts. Lessen the emphasis on current accounts, because you're far less likely, even to this day, to move your current account. But back then there was no, these startup fintech banks, right? You were hardly going to move from NatWest or Barclays or whatever
to change their accounts.
Yeah, they were not going to move to that. So I said, look, let's change that assumption. Let's launch savings products, and let's get people to taste them, try them, and then build a relationship with them, and over time take some of their wallet, more of a wallet share, and introduce them to some of our financing products. When they need a house, when they need at that time personal finance as well. And that strategy was quite successful, but it wasn't sufficient to turn around the full bank, because that's very much the deposit side, right? You need to build your asset book.
Yeah.
And so what we did was a couple of things. We invested in technology. We were one of the first banks to go into the cloud, and we used a CRM system to develop our put our savings products onto the cloud so people could buy them online and very quickly move to very attractive savings rates that I put out there.
Yes.
And so once I had that funding, the next step was to make sure I had good, what we call asset products, i.e. home finance,
yes,
buy-to-let finance, and commercial real estate finance. So we kind of then launched those and started building up our balance sheet.
Right.
We then had Al Rayan come in from the Middle East.
So before we get onto Al Rayan, let's take a little step back for explanation and understanding purposes. So traditionally, when money is put into a high street bank, that money is then leveraged up and lent out. How is the model different in terms of how Islamic Bank would work? Is it essentially a case whatever they've taken as a deposit, that's what they can lend back out or use for clients?
So look, a bank is like any organization. The balance sheet has to balance, right? It's what's called a balance sheet. So your assets, which are your finance products, have to be funded, i.e. by deposits, which are your liabilities.
Yes.
So when you give me a deposit, it's a credit for me as a bank. That's why when people say credit my account, it actually is looking at it from the bank's perspective.
Right. From a balance
it's a
sheet.
credit, meaning it's a liability. I owe my deposit to that money.
Yes.
So you've got to, anything you do on, so if I'm financing a house and I'm giving £200,000 against a £300,000 house, I've got to get £200,000 of funding, right?
Yes.
And that funding is from my deposit accounts. And so that it's just match funded.
Yes.
Yeah.
But in a traditional high street bank, it's a different model, is the point I'm making.
So no, I mean, it's the same principle. It's a balance sheet. You've got to fund it. The difference is what are the contracts between the funding from an Islamic bank and the funding from a conventional bank, and also the contracts for the financing. So we don't do loans as an Islamic institution. So Offa doesn't provide any loans. It provides financing though, and it's a different structure. And it's quite important to understand because a lot of people say, look, I mean, this just sounds the same.
Yes. And this is why I want to get into the nuts and bolts of this understanding, because many people don't grasp the differences.
So I think we'll probably just pick two simple examples on both sides of this balance sheet, right? So the first is the funding, right? If you've got no funding, there's no funds for you to finance somebody, right? So the funding is a savings account, but in reality, the contracts are essentially profit-bearing. These are profit-bearing accounts. This is not
rather than fixed return
interest-bearing
interest.
So it's not fixed return. I have to give you a target return. So I'll say to you, look, put some money in this savings account, and there are a couple of instruments. So I don't want to get too technical, but there's something called mudaraba. Mudaraba is a structure which it's a bit like partnership. And what it is you're the provider of capital as a saver. And you're giving it to me, and I'm going to invest it. And then we're going to share the profits. So if you look at the traditional savings account at an Islamic bank, and you look at the contract, and look, it's shortcutted for people because they'll go and say, look, I want to put some money in that account and I want to get a return. But if you read the contract, it will say, you've put this money into this account. It's going to be deployed in home finance, in our case. And then the income that comes in, we're going to share. And so what happens is there's a profit allocation, there's a monthly profit allocation meeting. And the Sharia scholars there, the management are there. We look at the income that we've had from the other side, the home finance. And I mentioned to you earlier, this diminishing musharaka, this shared ownership type contracts. So our rent that we collect goes into the pot. We allocate it across all our savings accounts, and then we run the calculation, the profit sharing calculation. And actually, it's slightly more complex because we have reserves and stuff for a rainy day.
This is how it's very different to how a traditional bank would work. So on the face of it, it can look the same, and even sometimes the language can be a little bit difficult to grasp because it looks very similar, because there's references to it's not interest, but compared to interest, this is what it would be. And some of that might be for compliance purposes.
That's right. That's regulation, right? And to be honest, it's fair. A consumer here is not constrained to Islamic, right? So, and some people are ambivalent between the two. And so they need to be able to compare products. And so, yes, whilst ours might be a target annual profit, they need to compare that to what's a high street bank giving. Not, and it's then a personal decision for them.
Yes.
So
it's a tool for comparison.
It's a tool for comparison, but unfortunately, the double-edged effect of that is they think it's too similar and it's the same.
And it's the labeling, it's maybe different. And this is why I wanted to kind of unpack this a little bit, because I think it's very important and it's very misunderstood.
That's right.
In terms of how it works.
Yeah. Because, I mean, look, a strong Islamic example that is often quoted and is used to kind of illustrate this point is marriage. Yeah. So it's in the non-financial services kind of a domain. But what is marriage? If you look at the Abrahamic faith, it's a contract.
Yes.
They're saying marriage contract. People use that term even to this day. We use it in the Islamic faith as well. We say the aqd, the marriage contract.
Yes.
And there's a consideration on the contract. If anybody studied law, any contract must have consideration. Even on a nominally free contract, there's a peppercorn, right?
Yes.
If you read contracts, so there's consideration on a contract. Now, if you think about cohabiting and you think about marriage today, two people live together, they bring up children together, they may, to an observer superficially, they look exactly the same.
Yes, like
somebody who's married, somebody who's cohabiting, they're bringing up children, they're having children, it looks exactly the same. What's different? There's a contract.
Yes.
And obviously the contract comes with obligations and you're signing up to, if you like, the rules of your religion, whether that's Christianity or Islam or Judaism or whatever. So you've got to think about that, right? So, but no one says that's the same, right? Marriage is the same as cohabiting. But there's a contract that governs it. And we've got to also think about that. It's not quite as simple as that, but it's a good example. So when you look at Islamic finance, the contract is fundamentally different to a loan and interest contract.
Yes.
But the cash flows will look the same.
Yes.
Because clearly
the appearance and the movement of money,
you're taking finance and you're giving, you're providing a return to the investors.
Yes.
So just imagine there wasn't a bank. And I come to Saj and say, take a share in my house, I'll give you rent, and will you allow me to pay you back over time? No one's going to say that's the same.
Yes.
No one's saying that's the same as an interest-based loan, but you've taken a share in my house and I'm buying a share back and I'm paying you rent. But then they suddenly say it for home finance, it's the same. And you see a lot of ill-considered comments on this. But in reality, they are very different and the contracts guide it. And I think beyond that, look, I'm not a scholar, but very renowned scholars have approved these contracts.
Yes.
People who have far more expertise, decades of expertise, have got certification, or what we call ijaza, certification from the great institutions of Islam. And they have approved it.
Yes.
So at one level, just let's take a really basic psychological approach, consumer psychology. What if I have a doubt? It all looks the same, the cash flows look the same. But I've seen the certification. I can see that the contracts are different. So there's a bit of risk transference here. Yes. So I might say, it looks the same. Am I risking dabbling in interest? But actually, these renowned scholars like Mufti Taqi Usmani and Sheikh Nizam Yaqubi have approved these contracts. So there's a bit of risk transference there, right? At a kind of psychological level.
Yes.
You don't need to worry about it because we are to a level followers in this, right?
Yes,
we're not experts.
We don't have their level of knowledge. Those people of knowledge are our guide.
Correct. So, and so that's the example. So when you take those two sides of a balance sheet, it's the contracts that are different, but the principle of funding it from deposits and doing finance, not loans, finance, that remains the same, and that's why it's called a bank. Ultimately, that's what a bank does. A bank is an intermediary.
If there's time, maybe we'll get into the slight differences of opinion that people have. But let's progress through the journey of when Al Rayan got involved.
Yes. So in terms of ownership, it transferred to a bank called Mustafa Rayan from Qatar. Okay. They bought out the existing shareholders, and that was, I guess, a time of growth. So we were still Islamic Bank of Britain. We undertook a name change, but they really provided a lot of fuel for the growth. And, it was a pivotal time for the bank. they're a large Islamic bank in Qatar. They gave us excellent support, and we used the fuel, i.e. the regulatory capital, without getting into a lot of, technicalities. They gave us the working capital and the regulatory capital, which is a different concept again, to help us build our balance sheet to about 2 billion by the time I left in early 2019.
Yes. And when you left, you were CEO at the time, Rayan?
I was CEO for about 9 years. Okay. Yeah. So from 2011, so 8 years, 2011 to 2019.
Yes.
And then I left to essentially pursue other opportunities, take a break. I mean, if you think about it, by that time, I'd done 26 years, hard graft in financial services, professional services. Took a bit of a break, did a bit of traveling, indulged
because you're involved in quite a lot of different things.
Indulged my hobby, National Zakat Foundation, which is charitable work. So I was one of the founding trustees of National Zakat Foundation. So for those of your listeners and viewers who don't know what zakat is in English it translates as alms, 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 right? And that is a form of charity, but for Muslims it's a compulsory form of charity, and it's one of the tenets of our faith.
Yes.
So it's a calculation of giving based on your wealth. I don't like to call it a tax, but some people, it operates a little bit like a tax.
Refer to it as a tax, yes.
Yeah, because it's alms, right, in English, technically. So you look at your wealth and you calculate a portion of that, provided you're over a certain minimum level. We call that the nisab. That's your eligibility to pay it. If you're below the nisab, which is this poverty level, if you like, if you're below it, you're a recipient. And so then it's the third tenet of our faith, it's the third pillar of our faith, that we essentially give zakat. And what does that mean? It means your wealth never just concentrates and accumulates without giving back into society.
Yes.
So that 2.5% is then given to an organization like National Zakat Foundation. In Muslim countries, historically, the government would form that institution, the Bayt al-Mal, the treasury as it's called, and they would distribute it to various categories, but chiefly amongst them those people in hardship and those people in poverty. And so at National Zakat Foundation, we help a lot of professionals and wealthy businessmen calculate the zakat, and then we help them distribute it, because we have thousands and thousands of people that we help, and we do it domestically. Yes. So the portion of zakat that comes in from the UK is given to people in the UK. And that's quite an important point for a number of listeners. We're very different from international aid organizations that send it abroad.
Yes.
We make sure we focus on people who have problems here, asylum seekers, refugees, people.
This is a huge demand here.
There's a huge problem here, and we can't ignore it. And it's very important to look after the people in our own community, people in our own neighborhood, in our own country, right? And that's one of the hallmarks of National Zakat Foundation. And we operate in 5 countries, but it's the same principle. Money raised in that country is distributed in that country.
Yes.
And you've got to look at zakat as a systemic way of creating support and empowering ourselves to look after ourselves, right? So it's a fantastic system, and it would be. It's been given to us by God, right?
Yes.
And there's a lot of blessing in it, because we are helping our own neighbors, our own brothers and sisters, as it were,
everybody
to get onto their own feet. Yeah, and it's a redistribution of wealth as well.
Yes.
Think about that.
Yes.
For society's benefit.
Yeah, and it's unfortunate we don't have lots of time to go into that, because that's a huge topic.
It's a huge topic.
In fact, actually, something I'd like to touch on that before we move on is we talked before off camera about waqfs and the importance of building them for the longevity of giving. So talk about your thoughts around maybe what is ideal in that space that's maybe not happening right now.
So waqf is, I guess we could translate it as endowment. It's not precisely the same thing, but it's close enough. So what do we mean by that? It's about building up assets that generate income. So, right, but it's not wealth for private gain, although you do get family waqfs as well. So family offices will have a waqf but we're talking about, let's call it social waqfs, right?
Yeah.
So these are assets that endow benefits to society. So for example, if you go to Istanbul, there is a waqf where the income supports cats, stray cats. There was a waqf historically where a waiter would break a plate and the restaurant owner might say, look, you have to pay for that plate.
Yes.
A waqf would cover the cost of that plate.
Yes.
I mean, that's how far waqf can go. But obviously, traditionally, there might have been a waqf that helps support a masjid with sustainable income, a waqf that supports a hospital or a school. And so we have kind of lost that in many ways.
Yes.
So you've got zakat, which helps society, and then you've got charity, pure charity, which goes to, a lot of it goes to consumption help. Somebody is in distress, there's an emergency appeal, they need immediate help, they need food, they need shelter. But as part of our portfolio of giving, we should also think long term. We should think about building up some assets that will generate income for perpetuity, if you like, land, buildings, investments, equity investments, whatever it is. And so we need asset management for that, which will generate income to support civil society, to support worthy causes.
Yes.
And I think one of the examples I always use is just imagine in COVID, where so many Muslims died, more than any other community, we were disproportionately impacted. What if there'd been a large multi-billion-pound waqf, which had large income that could actually be directed reactively to that issue?
Yes.
And more importantly, strategically to issues. So we know there's a ticking time bomb around elderly care in the Muslim community. We know that there are issues in terms of youth and from drugs to antisocial behavior. A waqf could direct help into organizations that help stop these issues escalating.
Yes.
So it's a proactive thing as well, not just reactive like a COVID would have been. So I think there's a real need for people to think a bit more long term and to look at their giving. And Muslims are the most generous in charity in the UK. Statistically, we give at least 3 times more. So you'd say, okay, well, what are we giving? We've got to give our zakat, that's compulsory. And that has to be given to the poor within 12 months, 11 and a half months to be precise, it's a lunar calendar. You've got your sadaqah, your charity, charitable giving, but we should be giving something for long-term benefit, like endowment. Of course, there isn't many endowments to give to right now, so there's a whole infrastructure to be built. But that's kind of my views on it. We could talk about it for
I think that's an amazing subject, and maybe that's a separate conversation at some point that we can have. So, as one of the founding fathers, a kind of reference I used earlier on, of Islamic finance in this country, we saw this huge growth from people like yourself and other people help build Islamic finance in this country. But then we seem to have kind of plateaued and very little has happened over the last few years. Why do you think that's happened? What's led to that?
It's a good question, but I think we have to put it in the context of the time this product and this industry has been around. So the first Islamic bank started 20 years ago.
Yes, when you put that into the context of, say, other banks in this country, which are around for hundreds of years.
The first home finance product, the most preliminary one, was in 1997. So only, less than 30 years ago.
Yes.
And you put it in the context of other industries, never mind other financial services industries. It's been a bit short time in the UK. Secondly, you've got to look at how education on Islamic finance products permeates from awareness through to education, through to an active buying decision. And that process is improving. There are, this podcast will hopefully help people understand Islamic finance.
Sure.
There are many people who are trying to promote it through social media. I think it's a responsibility of all players within the sector to do education. Because in the long run, I think you've got a growing population, you've got this pyramid-shaped demographic within the Muslim community. So there's I think people have said to me, 50% of the Muslim community are under the age of 25.
A very young.
It's a very young demographic, and they're actually very interested, and they want to live their life in a very ethical, value-led way. That's why you've seen Gen Z, as they say, in some respects being less materialistic in terms of career-driven, and they're much more about a balanced lifestyle. They think about the environment, they think about the ethics of a situation. We saw that with, for example, the demonstrations over Gaza, et cetera, right? So I think it's really important to get that education out there. So coming back to your question, so there's that initial excitement, the euphoria of the first Islamic bank. Then there was a plethora of players coming out, and then we saw players withdrawing.
Yes.
And that caused a bit of a hiatus, right? A gap. And sometimes there are a number of reasons for it, because for Islamic finance to continually develop, you need the regulatory and the tax environment to keep up so that it's a level playing field.
Yes.
So if we take something like the Consumer Credit Act, that makes it quite difficult for us to launch unsecured finance products like car finance and personal finance products that people would want.
Because the regulation and the framework is just not friendly to that kind of product.
Correct. It's
not conducive.
I don't think we need advantage. We just need a level playing field, right? We don't want any obstacles so that we can provide up products that people have a choice, right? It's all about giving them a choice. And so that's taken a bit of time sometimes. And then once we get one piece of legislation fixed through advocacy, we can launch some products. And I think there was this question mark during that troubled period I mentioned, whether retail and consumer products were going to really work in the UK. And I think that's one of probably the greatest successes I've had, was that we stuck it out where a lot of players left.
Yes.
So I had absolute faith that the community needed the products that we were providing. And so we developed those and we kept faith in it and we built the bank around it. And then that encouraged others to come back in.
And you demonstrated those demand.
Yeah, and a number of players have come in. And I think the latest calculation that I know about, if you just take the 4 Islamic banks, just the Islamic banks, not the finance houses, they have got assets of about 5.5 billion today. And that's a drop in the ocean against, the trillion or whatever that we've
But considering we're talking about the last 30 years, nothing existed prior to that.
20 years ago, there was hardly anything. 20 years ago, there wasn't even 20 million probably, or 100 million, right? So now you've got 5.5 billion, and that's just 4 of the players. I think the Bank of England have said there's 6.5 billion total in assets.
Yes.
So whilst it looks like to the consumer, there's like this troughs and peaks, it is steadily growing.
Yes. Just as a clarification there, when we're talking about retail, we're talking about ordinary individuals using like high street type banks, walking into a branch, savings accounts, taking on a home mortgage, versus other types of finance, which could be business finance, buy-to-let property, etc.
Yeah, so consumer products available to the everyday individual. So not necessarily commercial products or high net worth products, albeit those figures probably encapsulate those as well, the 5.5 billion. But I think that's what I meant by retail. There was a gap for a while. A lot of players have entered the market now, especially non-banks. So the non-bank financial institutions, the non-bank finance houses, we've seen, a number of players come in, including us at Offa, to provide services, fill gaps that the banks weren't doing. Bridging finance is a classic example. We were the first player to do Islamic bridging finance. And now, alhamdulillah, there's 3 or 4 players, right, who are doing it. So that tells you, right, that there's a niche that the banks weren't filling.
Yes. And
we've come in to fill that gap. We know, for example, that sometimes banks have legacy systems. It's not a fault of their own. They've been older. They're older than us.
Yeah, they've got a way of doing things.
Fintech is technology-based finance.
Yes.
So, we spent £1 million just on our buy-to-let system, so we can do it faster and do it, not paper-free, but very low paperwork requirements. And, if you're in a bank and you've got legacy systems, it takes a bit of time to move away from that. So I'm not criticizing the banks. I come from the banking sector, but what I'm saying is fintechs, if you take people like Revolut and Starling and Monzo and what they've done in the transactional account space through technology. It's all been technology led. And I think technology, things like crypto, things like tokenization, all of that, you're going to see quite a lot of innovation. And that reduces barriers to entry.
Yes.
So before, you need a lot of money and you had to be a bank. Now you can come in as a non-bank and provide more choice for consumers.
I think that's a key point that you've made there. Previously, the restriction, the mindset was we have to fit within the banking regulatory framework. Now there's more innovative products and ideas coming to the market, which mean you don't necessarily have to work within that framework and still deliver products. And a huge more of an uptake by younger generation who have grown up with a phone in the hand and all the apps already there to hand anyway.
Yeah.
So, I like to understand these products, and I've been a customer of Offa as well, and been through the process and utilizing the products. So there's often skeptics that exist in our space when it comes to understanding these products. And most of the time, we've all grown up with, you need to understand what's halal food, that's halal chicken, that isn't, I can't eat there, I can eat this. Our food and drink we're aware of, but there's very little awareness when it comes to the finance and how our money is used, where it's coming from and how we're spending it. And as you said, education is a key part of that. And what is it, do you think, that creates the skepticism in this space about, it's just labeled in a different way? We touched on it earlier on. And I guess there's an ideal way of doing things and there's a progressive approach. What's your thoughts?
I'm very interested in consumer psychology, right? And actually the regulator is these days as well. But let's take a randomized sample of Muslims and put them in a room. Let's say put 10 Muslims randomly selected in a room. How many of them would take out Islamic finance? How many of them wouldn't? And we did some research on this back in the day. But broadly, there might be, in a spectrum of adherence, let's call it adherence to Islamic finance principles, let's just look at that. So at one end of the spectrum, there'll be one of those 10 people who'll say, even Islamic finance products, they're just, they're not stringent enough for me. Yeah. It's all the same, and it's not stringent enough, right? It's a very hard ideological position.
Yes.
And then you move into a spectrum of people where, number 2 through to number 6, they are open to Islamic finance, but not necessarily just as one choice factor. So maybe 2 and 3 will say, it's got to be Islamic finance, got to be signed off by a reputable scholar, I'll take it.
Yes.
But once you move past them to 4, 5, 6, maybe 7, other factors come into play. The price has got to be good, the service has got to be good. I want the convenience as well. I want the app technology. And also the price differential. So one of the common complaints is the price is high, and we'll maybe cover that in a second.
Yes.
Right? So they will say, I'll take Islamic if other factors come into play. So if the price is the same, of course I'll go Islamic. Or if the service is the same, I'll go Islamic. And then somebody will say, okay, if the price is a little bit more, I'll take it. Right? And then by the time you get to number 7, he's going to say, well, look, I'm ambivalent. And then 8, 9, and 10, look, it's all the same. I'm not going to bother with Islamic finance. I'll take interest-based. So let's go back to the beginning of that spectrum, if you like, the ultra strict position. So many of the people in that at that point will say, look, it's too similar to conventional. Some of them in that segment will say, look, even the money, the notes that we pull out with the Queen's head or the King's head now, well, it's fiat money. It's actually not anything. It's only money because the king said it was money or the government said it was money.
Just a piece of paper.
There's no, it's not even proper fractional reserve banking anymore. It's just fiat, what we call fiat money. It's because we said so. It's legal tender, therefore it's legal tender.
We all accept that it has a value, but actually there's no intrinsic value on that piece of plastic or paper.
Correct. And so if you go back to dinars and dirhams, that gold coins were used, silver was used, and as a result, there was less inflation or whatever.
Yes.
I think, and then prior to that, you could even go to bartering, right? But the point being is, we have to accept that Islamic finance is less than 1%. It's not even 1% of the whole system. And that's like a drop of ink in an ocean. It just blurs out, right? So you've got to accept the environment that you're in and say, how do we make the best of it within essentially a conventional interest-based, debt-based economy? Do I sit there and say, I'm just going to exclude myself, or am I going to operate within it? And actually, they do operate within it. They go to the shop, they buy clothing, they buy food. So they're still participating. They are compromising in reality. And so, if you look at Islamic products as they are, even if you take the view that it's a compromise or they're imperfect, should you take the view that I want to be absolutist, or should you take the view that we're progressing it? That if we don't make the change, show the demand, I can't move on to even better products. And this is the biggest difference, I guess, and the biggest risk. There are those who say, for convenience, we've found a solution, let's just stick to it. And this is where you get a preponderance of what people call commodity murabaha based products. So this is a synthetic technique to arrange financing Islamically. It's imperfect, and there are reasons you would use it if there's good reasons.
It's created to get around a lot of the things, and there's arguments about acceptance.
Sometimes there's a very valid arguments for it, because, for example, if there was VAT on a building, if you went for a musharaka approach, then you'd be paying VAT on your finance payments as well. And so you may say, okay, commodity murabaha, it's imperfect, but it's allowed us to do a transaction Islamically, right? So, but this is the risk, and this is where I agree with, if you like, the ideological position that if you stick with these legal devices and you don't move forward, and it's just too simple to just build more products on it. And I don't agree with that. I've got to say, look, I'm going to use this legal device, but I'm going to work on something better. I'm going to progress Islamic finance. And I think that's where we're all participants in Islamic finance. We can all agree that we have to progress it. And that's my position. If you sit on the imperfect place and you don't push onwards, then I think it's a real risk and it becomes a problem. And it actually brings us into a bit of disrepute. People who then say it's all the same and you're not pushing it forward. I agree with them. So you got to look at the players, the people who are involved in the industry. You've got to look at how authentic they are, how sincere they are, and just, are they trying to push it forward? I've always tried to launch new products and push them forward, and continue to do so. And I think that's a good indicator for you if you're in that school, that one out of 10. The next 2 to 7, it's all about giving them all those other factors. How do I achieve better service, better technology, and get them a better price?
And that will come through competition and uptake.
Well, price is a really interesting thing. This is the most common complaint, probably.
Why does it cost more than the comparative?
I think service is probably service and price are the number one complaint. Service, because probably a lot of Islamic finance players are new and they maybe don't necessarily have had the investment. That's why the fintechs are very important, so technology focused. And then number 2 is price. And the price is a structural factor. And what I say to people there is, don't look at the price, but look at the margin that bank is making, or that institution, the finance house is making. And typically, if you look at the profit rates that those finance houses are making, they're not making any more money from you. So if they're not making more money from you, but the price is higher, that means that it's a structural factor. Typically,
operating costs are higher.
Operating cost is one factor. It's not the main factor, by the way. It is a factor. We don't have the economies of scale of a huge bank, but probably the bigger factor is the cost of funding. So let's rewind back to when I was talking about the balance sheet. Islamic banks tend to be top of the table or very high on the table when it comes to giving you good returns on your savings.
Yes.
Or these target returns.
So amongst the best returns.
They're giving you the best returns. But what's the consequence of that? If I'm paying my funders, my depositors, the highest rates of return, I got to charge my the people I'm financing a higher price.
Yes.
It just goes without saying. It's like a shopkeeper. If a small shopkeeper is going to be buying at a higher price, your large supermarket multiple is buying en masse, getting it at a cheaper price. Even if they all charge the same margin, one's going to be cheaper and one's going to be more expensive. And so it's about having that understanding. Now, I guess your average consumer doesn't care. He's saying, it's what's happening in my pocket. But I think it's, if you have the wisdom to see how the market's developing, if we support the Islamic finance players, they'll get bigger.
Yes.
They will have lower costs of operation, and they'll be able to procure lower cost of funding. And then we will have cheaper Islamic finance products.
Yeah, I think that's such an important point that you make there. Very few people understand that we can sit back and analyze and criticize, or we can get involved and say, let's work with what's there and support that in order to facilitate growth and innovation in the space. Otherwise, it's not going to happen. We could, as you said, there could be a version and that everyone accepts and says that works, and let's just create lots of competition within that space. Well, as opposed to that, the innovative products and alternative ways of doing things and growing and creating new products is really going to be where the benefit happens for those that want to utilize Islamic finance. In 50, 100 years time, inshallah, we'll be way, way further than we are right now if people get involved.
I'll give you a really good example of that, because this is not a function of just the Islamic finance industry. It's a function of any industry where you have a differentiator. So when our parents were buying halal meat,
yes,
they paid a premium.
Yes,
they paid a premium because they wanted to stay within their faith. Today, halal meat costs the same, or if not less, right? Because of a scale, Muslim consumption of halal meat is higher than the average consumption of meat. But if you go back now, roll back to when we were children, okay, and we're aging ourselves now, 45 years ago, 50 years ago, our parents didn't hesitate to pay more
and go through the inconvenience. Yes.
And inconvenience. They couldn't get it in the local supermarket. They went and bought halal meat, and they paid a premium to stay within the precepts of their faith. And then over time, as the consumption grew, the price dropped.
Yes.
And I think it's a really apt example, albeit it's a completely different sector.
But it's very relevant in the sense of we have to support and we have to get on board. And hence one of the reasons I'm running this series on Islamic finance, because I think the awareness and the education is so important. And there are so many operators in this space, many of us are not even aware of. So the encouragement and the awareness and utilizing of their products and services. So Sultan, just before we wrap up then, what's your view on where do you think we'll be in 10 or 15 years time in terms of Islamic finance? How do you think things may evolve or progress?
So I'm very optimistic, as I say, I'm sanguine about the industry. It's because you have to look at it, like I mentioned earlier, across a long timeline. So if you say to me in 10 years time, are we going to be dramatically different? No, because the cycle of time, 10 years isn't actually a lot of time.
Yes.
Having said that, innovation is moving much, much more quickly. So if you look at industry cycles, they say the level of innovation has accelerated. The last 100 years has seen more innovations than the previous 100 years. And what I mean by that is if you go back to 1801 and go to 1901, things changed with the Industrial Revolution or whatever.
Yes.
But if you go from 1901 to 2001, it changed again. And then if you go from 2001 to 2024, it's even changed even more.
Yes.
So you just switch on the TV and you see an 80s program. There's no mobile phones. And how have mobile phones changed the world and life, right? The internet, etc., etc. But that innovation cycle is very, very quick now. So whilst I'd say, am I going to see a dramatic difference? Maybe not. But you're going to see accelerated change. And I think there's things coming up like, I guess, blockchain, like tokenization, which will help accelerate that change. You're seeing much more in the way of peer-to-peer type products. I think it's really important that the regulations support that innovation. I think that can be something that stifles it, We need to encourage more competition, more players, and make sure that, you know, there is room for these innovations. Who's going to be the next, you know, Google and Salesforce? It'd be lovely if it was in this country, right?
Yes.
But in reality, let's just dropping down to Islamic finance. I think if I was gazing into the crystal ball, you know, it'll be, there will be personal finance products. There'll be some SME products, a lot more in the non-bank sector. So people who are coming in from fintech.
Yes.
There will be more stuff based on blockchain tokenization, Web3, what they call Web3. There will be innovations in that space, and I think the next generation will overcome barriers a lot more quickly. I think what I would like to see, so there's what I do see and what I'd like to see. I would like to see Islamic finance startups build in environmental, social, and governance factors from day one.
Yes.
Not that, oh, we'll do it after, because it's inherent within the Sharia, but we've just got to bring it out and build it into our product set.
Ethical from day one.
Yeah, so, you know, a Sharia framework actually already incorporates that. But I think the problem with some of our products is they go down the kind of Islamic finance rules, the fiqh muamalat,
Yes.
and don't necessarily incorporate the wider objectives of a Sharia, what we call the maqasid of Sharia, right? The principles of Sharia. And so, yeah, if you look at the fundamental aspect of it, we are custodians on earth. We're only here for a limited time. During that time, we're responsible for the resources that we command or manage, if you want to call it. We're custodians. And that includes the environment. Are we leaving the planet a better place after I've gone, or you've gone, our generation have gone, or a worse place? The answer is it's worse. That's not in my opinion, that's not in line with our objectives, of the overall objectives of Sharia. So we should build in environmental considerations. Social. We've talked about zakat. We've talked about waqf. Islamic finance should also push a social aspect. It can't just be about the rich getting richer. It's got to be about how do we share the benefits of our products across society, and governance, right? Transparency, fairness, you know, making sure that everybody has an equal opportunity within our companies. Of course, we should have that as well. So it's not a separate exercise. I would really urge all our startups and these new people entering the industry, don't do it as an afterthought.
Take a holistic approach from day one.
Expand the concept of Sharia finance today. Do it from day one. I think you'll find that your product sales will go through the roof, because, you know, Generation Z or Z, Gen Z as they call them, they're really into this as well, which I really love about that generation.
Much more aware about the environment, the usage, how we're doing things, where things come from.
Absolutely. So that would be my passing request. And then, as I say, I think we'll see progress. I think we do need the next generation to come through, the next set of leaders. People like you and I will be moving into more of a mentoring, coaching position. We won't be able to do all the work, and I'm encouraged that there are people interested in doing that.
But there are lots of very knowledgeable, intelligent people that are able to step forward. It's assisting them and guiding them, opening the doors, and allow people to come through and to build the future.
Absolutely, and I'm very positive about it. So alhamdulillah, let's pray for the best, but work hard. It's all about hard work. It's about using the faculties that, you know, Allah's given us.
Blessed with,
that we've been blessed with. And if you do everything with the right intention and with sincerity, every action is by intention. We will be successful.
And
inshallah.
Inshallah.
God willing.
Sultan, thank you so much for your time. It's such a pleasure. We could spend all day on this conversation. Such an amazing depth of knowledge and experience that you have. And may you continue to be blessed in the work that you do, inshallah.
Thank you very much. Jazakallah khair. Thank you. Thank you.